Treasury yields had a very up and down week, and despite today's stronger than expected job report, we held the range 170 to 190 in the 10-year bucket. So even if we tested the low side of that range earlier in the week, we come in with today's stronger jobs report, we test the upper end of that range. So right now the market's still holding and likely going to be in the middle of that range with all the events and news we have coming out next week, and I'll talk about that in a second. But for the most part, what we're seeing now in treasuries is a positioning trade for something that happens after the end of the year. Likely some kind of a China-U.S. trade deal that gets postponed until after the first of the year. We saw some heavy positioning there. So that is where market expectations are shifting. I know day to day we get bits and pieces and we get headlines and we get interviews and a lot of this back and forth, and nothing is really confirmed. But now we're starting to see a little bit of price expectation in the Treasury market, looking for there's defense being put on for some kind of a what-if scenario if they don't get the deal done before the end of the year. So that's something to keep an eye on. Market volatility. Well, as yields go up, vols go up. As yields go down, vols go down. And today, yields went up. We tested or neared the upper end of that 190 range. So obviously, we got a strong bid heading into the weekend, which is rare because typically after a major event like the jobs report, heading into a weekend like we are, volatility tends to be softer and tends to have a lot of selling and a lot of pricing in of the time decay over the weekend. We didn't get that today, and obviously there's a lot of events coming up next week. There's a lot of potential market moving news that could come out, and I think right now the three biggest we'll be looking at will be obviously FOMC. What will the Fed have to say? Their expectations for a rate cut are nil, obviously for a rate hike as well, and I think right now we're looking for what does the first quarter of 2020 look like from the Fed. We will get the forward guidance. We'll get a press conference, and I think at this point, Mr. Powell will likely keep things vague and open, as he's done before, given the idea that things can change very quickly. The jobs number today will be a launch pad for the Fed to not have to cut rates any further, at least in their vision, over the next several quarters. However, if things start to deter in the growth side and we start to end up seeing that GDP number go south, then they're going to keep another cut in their hip pocket. But right now, I think the Fed announcement will be the biggest, even if it's a non-event. The expectations and build up to it will be. Secondly, we'll have the UK elections. The UK elections are going to be big because obviously that changes any sort of the Brexit strategy. Right now, it doesn't seem there's going to be any kind of upset here, at least in the market's eyes. But certainly until those votes are counted and we get what we're expecting, then the market will continue to kind of hedge its bets. And lastly, we have an ECB meeting, and that in itself will kind of tilt the scales as we have a new president stepping in. And will they continue to go with the old Draghi do what is necessary mantra? I don't think so at this point. I think the ECB may be turning a little bit, maybe taking the foot off that gas pedal. I don't know what that looks like beyond for an economic standpoint, but I think at this point that's been fueling a lot of the trade over there. And maybe they won't stop with their dovish policies. However, they may stop announcing them. And so that is something to keep an eye on. The Fed, the ECB, and the UK elections, Treasury yields holding that range. But I think after next week, we could see ourselves above 190 or below 170, depending on where the dust settles on all three of those events. And of course, you always have China and U.S. trade talks that are going to give us some kind of a short-term move, unless there is some confirmation, unless the phase one deal gets done, unless there's talk of a phase two deal. All that could change things at a moment's notice. But at this point, it looks like we may see something next week. But again, positioning in the treasuries is looking for hedging for no change by year end, and that would give bond yields a lot of room to move to the downside, possibly through that 170 level. But again, that hasn't happened yet. Next week focuses on central banks and UK elections, and the market trades right at the midpoint or near the midpoint of that range as stocks continue to go higher. I think at this point the bond market is waiting for confirmation after next week's events, and then we'll take it from there.